On May 10th, everything changes. Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about how a massive information drop that is coming on May 10th of 2023 will drive Bitcoin into a major rally and rally it to at least our current local high of $31,000, if not much higher, to $32,935. In this video, we're going to be talking about why that rally to $32,935 did not happen last month and why I believe, based on something that I call the 2-month CPI cycle, that Bitcoin is going to go through that rally within just the next 2 weeks, and you will be seeing a major rally on Bitcoin. And towards the end of this video, I'm going to be showing you how you can capitalize on this movement. By the end of this video, I think you're going to have a much better understanding of where Bitcoin is, why Bitcoin is where it is, and where Bitcoin is going next, so that you can be set up to profit over these next couple of weeks in the king of crypto. So without much further ado, let's go ahead and dive right on into it. Every single month, very important government data comes out, and that is the 12-month percentage change in the Consumer Price Index. In short, a part of the United States government called the Bureau of Labor Statistics releases something called the Consumer Price Index, which essentially tells us how much inflation the United States economy, and therefore the United States dollar, has undergone over the last 12 months, and is updated every single month, normally on the second Wednesday of the month. That data will be dropping next on May 10th of 2023. Every month when we receive that data, so far this year, Bitcoin has gone into a major rally between $3,000 and $9,000. This will be the 5th time that that data releases, and I believe that this is going to be a big rally for reasons we're going to be breaking down in this video. Last month, when that CPI data released and we saw a 1% drop in annualized inflation from 6% down to 5%, most people believed that Bitcoin would go into a massive rally. That included myself, where I said in this video that I believe that Bitcoin would be going to $32,935 in the month of April. That didn't happen. Why? Before we analyze why my prediction was wrong, yes, you heard a YouTuber tell you that their prediction was wrong, I need to first explain a little bit about what technical analysis can do and what it can't do. Technical analysis cannot predict the future with 100% accuracy. What technical analysis can do is give us a forecast based on probabilities of where Bitcoin or other cryptocurrencies that have technical charts will be likely to go within a specific period of time, again with a certain probability. The probability last month was that based on CPI releasing, if that was over 0.1%, then Bitcoin would go through a major rally, and I gave it a price target of $32,935. Bitcoin instead rallied up to $30,978. So while Bitcoin did go through a rally, it didn't quite get to the price target that I predicted that it would go to, and I want to explain why briefly so that we have a basis for what we're talking about in the rest of this video. I believe the reason why Bitcoin did not manage to go all the way to $32,935 comes down to a few different reasons that we'll talk about in this video, but first and foremost, I believe the primary reason is because Bitcoin did not have a large enough correction here in the month of March and moving through early April. You see, whenever Bitcoin goes into a rally, it's almost like jumping on a trampoline. The further that you pull yourself down into the trampoline, the more potential energy you can build up to release into kinetic energy when you jump off of the thing. Whereas Bitcoin jumped very far down into the trampoline here at the beginning of March, it tried to jump off of solid concrete here in April. Because Bitcoin did not fall far enough in the beginning of the month of April, I don't believe that it built up enough potential energy to jump all the way to $32,935. Because it had a smaller correction, or frankly no correction, it ended up having a smaller rally. This is seen very clearly in example over here in the month of February, where we saw Bitcoin had virtually no correction and had a very small rally, opposed to in the later part of February and early March, we saw a major correction and therefore a major rally after bullish news came in. In short, the reason that Bitcoin didn't rally as far as we would have predicted in April was because it didn't correct as far as we would have predicted either. It basically traded sideways. There are a couple of implications for that. First and foremost, trading up here above the critical level of support at $25,236 and not even going back to backtest it does indicate that the bulls are very strong and they don't even need to fall back on that level of support to sustain their momentum. The second implication, however, is that during the later part of April, after the CPI data release, Bitcoin still hasn't had a major correction, which does cast a little bit of doubt on how large of a rally we'll be able to have come May 10th when that CPI data releases again, and it probably, hint, hint, will be a decrease once more. So now that we understand why Bitcoin didn't go to $32,935 last month, will it this month? Let me preface by saying, since Bitcoin did not hit its price target last month, it does cast some doubt on whether or not Bitcoin can hit its price target this month. And also remember, past results are never guarantees of future results. All that we can do through the lens of technical analysis is to look into the past, ascertain what the trend is, and say if this trend continues with a certain degree of probability, then we would expect such and such to happen. I have a theory about what's going on technically that I would like to present to you, so let's go ahead and jump on to the chart. You see, in this video, we predicted that Bitcoin would rally to $32,935 at least on the day of April 12th and on the days following. Bitcoin obviously didn't do that. It only rallied to $31,000. But in that video, we showed this chart. And in this chart, I show something that I believe is still going to be very relevant this month, and that was the CPI cycle. That video was filmed here on Thursday, April the 6th. And to the date of April the 6th, I had shown these boxes outlining what I call the CPI cycle. They are defined by the CPI dates and how the market revolves around them. We've seen the CPI data release, as you can see from the schedule of releases, on January 12th, February 14th, March 14th, April 12th, and next will be May 10th. When we saw the CPI data release, as you can see, every CPI cycle so far that led to a major rally, which is every CPI cycle so far this year, had this red zone where we saw a correction in the market. That did not happen before the CPI data release on April 12th. The difference that we're running into this month is that Bitcoin has now had that correction. Starting on April 14th, running all the way through April 24th, Bitcoin corrected $4,000, negative 13% over the course of 10 days, a much larger correction than we saw during the first part of April before the April CPI data release, and a pullback even greater in size to what we saw in the first part of February, where we only dropped $2,800. One point of doubt here is that we did not correct below this uptrending level of support that is based right around $26,700, so it is possible that Bitcoin did not correct far enough to sustain a major rally moving into the rest of April and into May. However, and this is where it gets interesting, there is a wild card in the mix this month that may change things. You see, on May the 3rd, the United States Federal Reserve's Federal Open Market Committee will be releasing the Federal Reserve rate hike, and it will almost certainly be a 25 basis point rate hike. That will take rates from their current target 4.75 to 5% to 5.25%. That will affect every single facet of the economy, from CDs, bonds, mortgage-backed securities, treasuries, credit cards, mortgages, student loans, anything that has to do with debt and overnight banking transfers. The Federal Reserve's interest rate is one of their most powerful tools to manipulate the economy, and the economy typically undergoes a tightening whenever they raise rates. Those rates raising also typically lead to a downturn in the market. As seen briefly here on this chart of the SPY, every single time that we've seen the Fed release news, we typically have a short-term, at least 2-day correction in the market, if not even larger. The next time the FOMC releases this announcement will be May the 3rd, exactly 1 week before CPI releases. It is very possible, therefore, that the Federal Open Market Committee releasing their decision that they will be raising rates on May the 3rd, as outlined by this red line, could cause Bitcoin to go through a sustained drop down to $25,236, or even a little bit higher than that. Nevertheless, sending more bearishness into the market before we see CPI data coming out on May the 10th, leading Bitcoin to the upside. However, that's not the only reason to believe that Bitcoin may go through a substantial amount of bearishness over the next couple of weeks. To understand what I mean, you must first understand why I drew these two green boxes on my chart. You see, until this last CPI data release, the CPI cycle seemed to be a cycle based on one movement to the next. Again, as I talked about in the last video talking about CPI cycles about a month ago, there was a certain cycle that looked a little something like this. CPI data would release. Right around that time, you'd go through a major rally. Following the CPI data release, between 2 to 7 days later, you see sideways action. By the end of the cycle, you see a correction, and then the CPI comes in, it lowers, and you see another rally. However, it is becoming more clear to me that what we are actually looking for are groupings of 2 CPI data releases. Let me explain. This is where our prediction will come from. This is our first CPI cycle here. It includes the month of January and February. This is our second CPI cycle here. It includes the month of March and April. During our first CPI cycle, we had a major rally to start with, then a small correction in the middle, then a small rally during the second CPI-driven rally, and then a major correction to end the 2-part cycle with. During that time, that major correction on the second leg of the CPI cycle was driven by bearish MACD convergence and bearish RSI divergence. MACD and RSI divergence are driven by lower highs on the MACD, whereas the market is setting higher highs on price action, as you can see denoted by this blue trend line right here. The identical thing has happened so far in March and April. We initially, based on the first CPI release, saw a major rally, followed by a lackluster correction, then followed by a lackluster rally, followed now by what seems to be a much larger drop, similar to how we saw in late February and early March. Should this trend continue, what we've seen next is a major rally that comes into play, such as what we saw here in March and in January. To simplify that, we have seen one cycle in January and February, one cycle in March and April, and both of those cycles have begun with major rallies. You can see our first cycle here led Bitcoin through a rally of over $7,900. Our second cycle here led Bitcoin through a rally of over $11,000. Should that happen again, let's average them out and say we see a rally of about $9,000 from the local bottom at 27,000. That would give us a rally to roughly $35,000 to $36,000. That would easily put us at $32,935, which we have already defined as a very critical level of resistance by the end of May. But again, that prediction is based on a couple of assumptions, as all technical analysis is. We're not reading tea leaves here, guys. We are looking at past trends and predicting future performance, but past trends never guarantee future performance, so we have to make sure we add that caveat in there, because a little bit like meteorology, it's helpful to know that a hurricane might hit you, but there's always a chance that it might veer off and hit your neighbor. Better to know and have a false alarm than to have your house leveled while you're trying to sleep. Some of the caveats here. First and foremost, Bitcoin very well may not have gone through a large enough correction so far in April to warrant a large enough rally to send us to $32,935 in May. It's possible that by us not dropping down to $25,236, likely as a result of a short squeeze, since Bitcoin did not have a large enough correction, it's possible that Bitcoin just ranges here for another month and we have to wait another month for a rally up to $32,935. The other caveat is that I'm kind of banking here on Bitcoin responding at least somewhat negatively to the CME futures data coming out, where we will see a 25 basis point rate hike. Traditionally, Bitcoin goes through a correction whenever it sees that kind of announcement. And my final caveat here is a technical one. Before all of these CPI rallies in January, in February, in March, and in April, we saw MACD bullish crosses, and we are seeing one come into play right now. However, we're coming into play much earlier than we have in the last 4 cycles. That could mean that something's a little bit off about this cycle. Or this MACD cross coming in bullish here could mean that Bitcoin's moving under its own steam and it's starting to break away from the CPI cycle and going into a bull market of its own volition. The reasoning why this MACD cross is coming into play so quickly is something that we do not have enough information for right now, but it is technically speaking a bullish case. And at the same time, we are also seeing RSI cross above its 14 interval moving average, which is always a bullish sign. We have seen a market rally every single time that has happened in recent memory. So how do you profit off of this information? Well, as always, to make a profitable trade or investment, you have to have an understanding of the technical analysis. And I want to tell you something. This month, Bitcoin is not being as clear with its signals as it normally is. As an analyst, that is the first thing that I need to tell you, because the analyst can only ascertain as much as the market is willing to give up. And if the market is not telling you enough information, then it's difficult to make a great prediction. That's where we are right now. That being said, considering the limitations of technical analysis, I do think it is possible for us to make a prediction that Bitcoin will go through a rally above $30,000 and attempt to rally up to $32,935 over the next 2 weeks. And I do believe at some point, at least in the next few months, that Bitcoin will break that level. And when it does, Bitcoin will have, not concretely, but at least on a surface level, confirmed a bull market. How do you profit off of this? Well, quite simply, you set a level of resistance that you say if Bitcoin breaks, you will go into a trade, and you set a very tight stop loss. I'll show you an example of what I mean. Our current level of resistance on Bitcoin and our local high set on the 14th of April is $30,957. If you were looking to trade a breakout up to $32,935, your best bet is to not enter a long position until after this movement. Is it possible to get a little savvy down here and trying to enter a long before that trade? Absolutely it is, but just keep in mind, since this market has not set a new confirmed high, you are still in a confirmed downtrend and you are betting against the trend. That's normally not the best idea. If we break above $30,957 and you see Lux Algo come in with a confirmed buy signal, which very well may happen soon if we get above 30K, then a long position may look something like this, with an entry price at $31,200, an exit at $32,935, and a stop loss at $30,750. Let me preface, this is an idea. Please don't copy it verbatim. Learn from the principles and come up with your own entry, stop losses, and exits. I'm not trying to give you trading advice, just giving you an idea of how to do this. Wait until after we've broken this level with some confidence. I would not set this as an automatic trade. You will be setting yourself up for failure, because it is very possible that you'll be catching a top, entering a trade, and immediately losing your money. If, however, you do decide to trade this hopeful rally up to $32,935, wait until a confirmed breakout. Again, a confirmation could come from something like Lux Algo, as well as multiple other signals. Immediately set a very tight stop loss, ideally at least 0.15% above the level that you entered in. Why? Most exchanges are going to charge you less than 0.15% as a trading fee. So if you set your stop loss 0.15% above where you entered, now obviously that necessitates you entering the trade and instantly getting some profit, then you stop yourself from losing any money, including the trading fees, so that if you go too far to the downside, at least you break even. At that point, set a very conservative trailing stop loss, because if your market breaks 30,957, it's probably going to 32,935 very quickly. So you can have a very conservative stop loss, which you can then widen when you get closer to the level of resistance at $32,935. And also keep in mind, while this is only a 6% move, if you do use some degree of leverage, you can make a lot more money with it. Please, however, be very careful with leverage. If you don't know what you're doing, you can really burn yourself. It is tempting to use leverage because we're talking about a 6% movement, but 6% is a lot of money if you're trading with a good enough capital base. Remember to use conservative stop losses, and also remember not to trade while you are emotional. Will Bitcoin go to $32,935 this month? I think that there is a strong likelihood that the answer is yes. At this point, however, Bitcoin has broken some of the confidence in the market because it's also broken some of its own trends, and it's in the process of reestablishing some of those and reestablishing market structure. When a market breaks market structure, it also breaks the trust of the analyst, because it means that we can no longer trust many of the patterns that we've come to rely on to make our predictions. That's where over the next month or so, we're going to have to wait and see how this shakes out to see if Bitcoin is going to maintain itself above the transitionary zone between 25,236 and 28,545. And if it does, there's a very strong likelihood that however it happens, Bitcoin has entered into a bull market with confirmation. And that's what we're all here for. If you enjoyed today's video and today is a little bit more elaborate technical analysis, I would love for you to give me some ideas for what you would like to see in the comment section down below. I'm always trying to make content that you guys love. So if you enjoyed this content, make sure to hit the like button, subscribe to the channel, hit that post notification bell so you won't miss a single upload. On that note, though, I do have to wrap out this video, but before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.